What I want to see as a stock is Castrol, because remember, amidst all the gloom and doom today, Castrol came out with a very good set of numbers. Their EBITDA margin expansion has been fairly strong as well. Bring up that stock of Castrol for our viewers and you will see what I'm talking about. Okay, that is also under a mild bit of pressure. But let's get in Rashmi Joshi, Director Finance of Castrol India, to talk about the numbers, more importantly, the outlook ahead. Rashmi, so good having you. Thanks so much for joining in. Sum up the quarters. By the way, do mention to Ravi that we're missing him today. But sum up the quarter for us, Rashmi. I mean, how did it pan out for you? More importantly, is this performance that you've given on the operational front sustainable if crude stays where it is?
Okay, so as you mentioned, Castrol has delivered a strong set of numbers in the last quarter, and there are three things which have helped us deliver this number. One is a strong operating momentum. Second is premiumization of product portfolio, and third is the cost of goods environment, which is favorable to us currently, as you mentioned. So, and you also asked whether if it remains, at the same level, whether, you'll have similar kind of margins. So, answer to that is yes. If base oils remain where they are, which we expect probably they will be for a period of time, and if, exchange rate is something which we can't really predict at this stage, and they seem to be volatile. It all depends on what Fed does to rates and various other factors in the global economy. So it depends on what rupee does. If the cost of goods environment remains where it is, then obviously we will have very strong performance even going forward in the longer term. Because you will also see that our volume performance is, though not higher as a whole versus last year in the same quarter, our personal mobility segment has been doing very well, and that has been our strategic focus. Our power brands are doing very well. Castrol Active, which is our leading motorcycle engine oil, has gained market share, and despite a headline volume drop that you see, we have overall held our market share as per the latest retail audit data.
Right. We've seen a bit of a margin expansion coming in here, Rashmi. It's to the tune of about 27.5%. Do you sense that you'll be able to maintain your EBITDA performance, or do you think you can even better that in the future quarter?
So, as I said, if the cost of goods environment remains where it is, and you'll also see that our, cash cost is very, efficiently managed most of the time. Considering these two factors and considering our focus on product premiumization, I do expect strong margins to continue. That's our strategic focus as well.
Rashmi, I think where Aisha was trying to come from is that a couple of reports mentioned that in a stable price environment, you may be price setters, but in a low oil environment, because of increased competition, Castrol might actually have to be a price taker and not a price maker. Is that the scenario right now, and therefore does that put a pressure on margins?
So you must have seen from our numbers that we have not really dropped prices significantly versus last year same quarter, and there has been a lot of competitive activity in the market. However, we have been able to hold our prices, and that is attributable to the premiumization of our product portfolio largely. And as I said, we continue to focus
Rashmi,
on our power brands, which have grown significantly in double digit in volume as well as gross margin.
No, but I'll tell you where I'm coming from,
So
Rashmi.
that will help us retain the margin levels is how I look at this.
Yeah, but I'll tell you where I'm coming from. Maybe because you didn't drop the prices is why your revenues have remained flat. And correct me if I'm wrong here. Maybe because of that, the revenues are flat, even though you've shown an expansion in margins. Would you, for the sake of expanding revenue, which is flat this quarter, have to compromise on prices and therefore on margins?
So to that, I would say, if you look at our volumes, which is primarily probably responsible for our margin, our revenues being flat. If you look at volumes, we have grown in personal mobility. Where we have dropped a bit of volume is commercial vehicle segment, and that is more a function of what is happening in the economy currently. So the freight movement have not really picked up. You also know that the tractor sales have been down year on year almost 20%. So if you see economic growth, which we expect anytime soon, and if that happens, we will certainly see higher volumes even in commercial vehicles category. And if the industrial production picks up, which I don't think it has picked up, during last 6 or 7 months to a great extent. So if both these things happen, then I do not see why our top line wouldn't grow. So pricing response is something which we do, on case by case basis. We keep reviewing our prices on different products. And, as we see the market and competitive activity, those are the tactical decisions we make. But I cannot say that we will drop prices to gain more volumes, because that's not our strategy.
Okay, we're going to leave it at that, Rashmi. So glad that you could take time out and speak with us today.
Thank you.
Well, IDFC, within seconds from now, we will have a new listing. So let's just wait by and see what the number is. 60-20. Well, Pune